Value stocks versus growth stocks. Which one is better and why? Welcome back to Investing and Stuff. It's your host Sebastian, and today we're gonna explore the age-old debate between value stocks and growth stocks. So in the stock market, stocks fall into usually either a value category or a growth category. And in the value category, usually you'd see names such as AT&T, such as McDonald's, such as Coca-Cola. So most of the times it's mature companies. They usually pay a dividend and they're probably very profitable. And then in the growth categories, you might see companies such as Tesla. You might see many tech companies that are still growing. Maybe some of them are not that profitable yet because they're still reinvesting most of their profits back into the business. Now, if we take a look at the Russell 1000 growth ETF and compare it to the Russell 1000 value ETF, we can see that the growth ETF has outperformed by just a little. However, this chart doesn't actually include the dividend, so if we add the dividend, I'm pretty sure that the value one would substantially outperform the growth one. However, there's something that we do need to consider here. These ETFs, like I said, they were either invented or we have the data starting with the year 2000. However, as most of you know, in the year 2000, we had the biggest dot-com bust ever. And in my opinion, it's not actually fair to look at it from the year 2000, since that's when the tech stocks took a huge dip as compared to the value stock. The reason why I bring this up is because I've seen quite a few studies comparing these two ETFs, and many of them start from the year 2000, which in my opinion is kind of cherry picking the date so that it suits whatever side you want to pick here. That's why, for instance, if you want to make the tech stocks look good, you would probably start it from 2009 after the financial crash. Most of the value stocks have vastly underperformed the growth stocks ever since 2009, so it really depends a lot on what date you pick. But in my opinion, probably a safer way to do this is to go back as much as you can into the past. So for instance, we could compare here the Dow Jones versus the Nasdaq. Now, even though this is not the greatest comparison to make, because Dow Jones also has some names which may be considered growth, so for instance companies such as Apple or Microsoft, Nasdaq definitely has way more growth stocks and way more tech stocks when compared to Dow Jones. So if we take a look at these ones from 1981, we can see that the Nasdaq has significantly outperformed the Dow Jones. And this is including that dot-com bust, which you can see here on the chart around the year 2000. And one of the things which I mentioned here is that usually people like to give a quick answer depending on their preference, but in many cases it's not that simple of an answer, because even among value stocks and growth stocks, they also have subcategories which you may look into. So in my opinion, you would have your moderate growth stocks. So these are not so aggressive growth stocks. Usually these are larger caps, so they don't grow as fast with some small exceptions. You then have your aggressive growth stocks, I would say. So these are usually your medium cap companies maybe such as Roku, companies such as CrowdStrike, such as Snowflake. But even beyond this, you may have your speculative companies. So many of these maybe are probably specs that are hot, or companies that don't yet have a full product working, or companies which have a really small market cap, maybe sometimes maybe even penny stocks. So these ones definitely have potential to grow even more. However, they're way more speculative than the other ones which I mentioned. Now, a few minutes ago, we compared the IWD and the IWF, which was the Russell 1000 Value and the Russell 1000 Growth ETF. However, personally, I was quite surprised when looking at the holdings of these ETFs. So if we take a look, for instance, at the Value ETF, sure, we have here names that we would expect to see in a Value ETF, so companies such as Johnson & Johnson, Berkshire Hathaway, Walt Disney, and stuff like that. But I was quite surprised to see that in the Growth ETF, even though not at the top, we have many companies which I would consider more towards the value side. So companies such as AbbVie, such as Merck. Now, I'm not sure why these types of companies are included in this growth ETF. This is not something which I would, in my opinion, classify as a growth stock. However, we have to consider the fact that this growth ETF also has many of the names which over a long period of time could actually drag it down a bit. Now, if we take a look at the more aggressive growth ETF, for instance, the famous ARK ETFs, we can see that the ARK ETF has significantly outperformed even the Nasdaq over the last 5 years. Unfortunately, we don't have a lot more data to look a lot more in the past, so we kind of only have to go with about 5 years worth of data or so. But in my opinion, the ARK ETFs would probably be more along the lines of what I would consider a growth ETF, much more than the Russell 1000 growth ETF. Now, with regards to the ARK ETFs, obviously many people have many opinions about it. I'm not claiming that they're necessarily better. However, just looking at the data here, we can see that they have tremendously outperformed the other two even before the COVID pandemic. So for instance, many people say that, ARK has only done good ever since the COVID pandemic because a lot of traders have gotten into these names, and that's partially true. However, we can see that even in February of 2020, ARK was significantly outperforming the Nasdaq and the Dow Jones. Another aspect to consider when choosing whether to invest in value stocks or growth stocks is what type of investor you are and assessing the risk which you are willing to take with your investments. So for instance, many value names are gonna be much safer than many of the speculative growth names, especially those smaller market cap or maybe some of those specs. But also value names are easier to cope with in your portfolio. For instance, if we take a look here at McDonald's, which is obviously a value name, we can see that it barely had a drawdown of about 16%. I'm not counting the COVID crash here because this was quite a unique time. And during the COVID crash, almost all of the stocks went down quite a lot, so I'm kind of ruling that out. However, let's now take a look at some of the successful growth stocks of these past decades. So for instance, I'm pretty sure that almost everyone is familiar with Amazon and the fact that they grew like, I don't know, a gazillion percent ever since their IPO. Obviously, we can see the same thing in Netflix, in Nvidia. However, one thing to note here is that if we take a look at Nvidia, for instance, we can see in 2010, so this is after the financial crash, they had a drawdown of almost 50%. Now, this looks small on this chart because Nvidia is so high nowadays. However, even if it looks small on this chart, at that time the stock was down almost 50%, which is something you don't usually see a lot of for value names. Then moving forward a few years ago, we can see that it had another 52% drawdown in 2018. So it's easy to say now in hindsight that if you bought Nvidia 10 years ago and you just held on to it, you would probably have made a tremendous return on your investment. However, do bear in mind that these companies tend to be way more volatile. Nvidia is obviously not the only case like this. We can see Netflix here, it went down 77% in 2011. I'm not sure how many people would have held on to their stock if they see it's down more than 70%. Moving forward, just a few years afterwards, we can see that Netflix had another drawdown of this time only 36%. I'm saying only 36% because the last one was so large. We can take a look at Twilio. This is another one of my favorites. In 2016, they had a drawdown of 62%. Then just 3 years later, they had another drawdown of 37%. And I could go on with these examples for a long time. For instance, here CrowdStrike, which is one of my favorite holdings. This one had a drawdown of 51% in 2019. And again, when you compare it to a value name, for instance, something like Berkshire Hathaway, we can see that Berkshire has barely dropped about 12% in 2018 when many of the tech stocks got crushed. And all of this has to do with the beta of the company. And the beta is just a metric that shows how volatile a stock can be. So usually you would see that value stocks have a much lower beta than many of the speculative growth stocks. So for instance, we mentioned McDonald's. We can see here that they have a beta of 0.62. So basically, if they would have a beta of 1, then that means it moves in line with the market. So in the case of McDonald's, we can see that it's actually even less volatile than the overall market, so probably against the S&P 500. However, if we take a look at a name like Square, which is also one of my favorite holdings, this one has a beta of 2.43. And that's reflected in their stock performance. We can see this one had a drawdown of almost 50% just a few years ago. So if you're the owner of a stock like Square, you just can't catch a break. Like, the thing might go up 100% and it might go down 40%. You have to be prepared for that kind of stuff if you want to hold these kind of stocks for the long term. Now, as some of you know, I've started a growth portfolio only in January of this year, and even from January till now, you can see that my portfolio has been quite volatile. At some point, I believe it was down about 10%, and many of the individual holdings in it were down even 30 or 40%. So in conclusion, if you take a look at my portfolio and the holdings in it, I'm pretty sure you know what side of the fence I'm in. However, it doesn't necessarily mean that I'm gonna be right, and if you're a value investor, you're gonna be wrong. It's just my opinion that these stocks are probably gonna outperform the market, but only if I'm willing to hold them on for long term. I'm not selling when there's a 40%, 50%, or even a larger drop, and I'm probably gonna even be buying on those dips as well. Now, if you guys are new to the channel and you enjoy this type of content, please make sure to subscribe, and I'll see you in the next video. Bye bye.